So I'm really excited with this interview. I've been looking forward to this one for quite some time. I've been working with Susanne for a number of years now on different projects. Susanne is the founder and chair of the Fintech Circle. She's a non-executive director of the Crown Agents Bank, which is a FTSE listed wholesale bank. She's a board member of the Elevator Ventures, which is a VC fund of the Horizon International Bank. She's also chair of the ESG subcommittee of the board of CAB Payments PLC. My goodness, she's also a keynote speaker and co-editor of the highly acclaimed fintech book. So, without further ado, Susanne, it's a real pleasure to have you on our podcast. And I would very much like to hear from you who you are, what you're doing, and then we'll delve deep into the fintech circle and what you're getting up to in the sector.
Sounds great, Ben, and thanks so much for having me on your podcast. I'm really excited to chat today. So my background is I'm Austrian. I came from Vienna to London with Accenture almost 26 years ago, and then I lived and worked my whole life in banks, from Morgan Stanley Asset Management to Lloyds to Deutsche Bank. And then 10 years ago, I realized that the fintech sector will be the same as the internet was 20 years earlier when I studied in Berkeley, actually in the Silicon Valley, when the internet changed our lives for good. And so in 2014, I worked for Deutsche Bank and I could see there were fintech companies being launched all over the UK. And I was in this ivory tower, in our bank without any contact to the outside world and to specifically to fintech startups. And I thought it would be so much better if we would be able to, number one, identify, who these best startups are, and number two, invest in those so that we are becoming shareholders in the future of finance. And that's what Fintech Circle has become. So we are consisting of three circles. Our inner circle is our investor network, where we are about 70 angel investors, and we are all backgrounds in either technology or finance or insurance or asset management, so all in broader sense of financial services. And we invest our own money into startups and try to provide really smart capital, try to help our companies grow. And the outer circle of Fintech Circle is our global community, which, as you said, where we published 7 books so far. We've done fintech documentaries with ITN, and where we reach more than 250,000 fintech entrepreneurs, investors, lots of financial services professionals. So we have got an ecosystem which we've built and which I'm really excited about, and doing that out of London.
Fantastic. Thank you for that. Maybe if we step back a little bit, and I wonder if you could tell us a little bit more about the fintech sector. What are the developments? And what's happening here in the UK? And I assume most of the fintech companies that you'll look at are UK based, or do you expand out into Europe as well?
Yeah, I would say most of our investors, we are all based in the UK. I mean, many of us are international by background, but we earn our income here. And therefore, investing in startups in the UK is very tax incentivized as well. As many of you will know, the SES, the EIS tax benefits. And so I would say that's why we focus on UK startups, definitely in terms of our investment focus. And the sector has evolved, in a very exciting way, Ben. I remember 10 years ago when it all started, when fintech was not yet a term which people used often. It was a small industry, but the government did a great job in supporting the fintech sector and almost putting it on the map. And I remember our former Chancellor Osborne at that time, he said he wants London to be the global fintech hub. And it became that, so it's often when you've got visionary leaders and of course the whole ecosystem comes together in terms of government, regulators, investors, entrepreneurs, you can build something really great. And so in terms of the fintech sector, we have seen initially it was really B2C focused, business to consumer focused fintech solutions. Then it became more B2B. Now in the UK, we are about 87% of our fintech companies are B2B. In fact, about 30% are B2C, and about the 17% are both. So we've got, a really big majority is B2B companies now. And of course, B2B is more complex to understand. And so when people ask me, so what is fintech exactly? Then I always say it's like a cube. It's got in three dimensions. On one side, it impacts all parts of financial services, which can be transaction banking, investment banking, insurance, so any part of financial services. The second axis is which technology do you use? So it could be, from AI, of course, cloud computing everybody uses now, could be quantum in the future. So which tech do you apply? And the third axis is which business model do you run? And the business model, B2C, might be B2B, might be B2B2C, or B2G, business to government, business to regulators. So we see all these various business models coming together. And once you have got this cube structure, and as an investor, you look at, one sub-segment of the cube where you then compare who else is around, who else is a, B2G, let's say, a RegTech company offering AML solutions. Then you can compare what you see, is it good, and what has been already funded, and what else is exciting about the company you're investigating and doing DD on.
And Susanne, tell us a little bit about, what has it been this second Payment Service Directive, as known as PSD2, which allows for the deregulation, which allows for this kind of where people were stuck with their accounts at a bank. Now they have access to and can transfer their accounts from one establishment to another very easily. Is that the sort of deregulation that has occurred that has encouraged this opening up of the sort of alternative sector of finance?
Yeah, I would say BSD2, open banking played a key role. And it's an example where regulation is a good thing for the sector. Often people always complain about too much regulation. But in fact, regulation can be a driver of innovation. And in this case, it clearly was, because it opened up account data which banks hold to fintech startups. And instead of, when you think about in the past, you would have, let's say, a fintech B2B2C startup, who wanted to get access to the customer's account data at the main bank, having to go through the procurement arm of the main bank, and they would have probably said no. We won't give you access to our customers' data. And of course, with open banking, this has changed, and now the decision maker is not the procurement department of the bank, but it's the end customer, him or herself, who can give access to fintech companies to provide the data. So it has been a huge catalyst, but it was not the only reason why the UK became such a fintech leader. I would say the other variables are that we have got a very strong and highly open population, which is open to try things out. In the UK, we've got lots of people who are willing to download an app. Let's give it a go. Let's see if it works. And really give fintech startups a chance to prove themselves. I would say the other variable is having a really supportive regulator with the FCA, who has in its mission, of course, on one side, customer protection, but on the other side, it's about competition. And so the FCA from the early days in the last 10 years basically started to reach out to fintech companies and offering them access to sandboxes, regulatory sandboxes to try out new business models, to try out new technology without having to incur hundreds, thousands, or millions of pounds potentially in gaining a license. So you could shortcut this process by really testing your proposition first and seeing if it works. And so the FCA became I think, a role model, for many regulators globally who have followed this regulatory sandbox model. And even now, they offer lots of tools, where investors can go in and say which use cases are there for using AI in fintech. What are companies are offering those use cases, so that you can have more information as an investor as well, what has been tested. Then one example, Ben, in our sector, of course, doing investments, giving investment advice is investment advice, versus guidance. When I remember, at Morgan Stanley, we were very strict. We always said we don't give advice. I mean, in our asset management division, we only give guidance. And now there are fintech companies out there who provide AI-powered advice. And the first company, in the UK, for example, which has passed the Chartered Institute of Insurance exams and got better grades than a human competitor, you could say. So it is incredible, what we are seeing now. But I would say, so in summary, it has been a regulation, was a big drive. It's regulation. It's also customer base. And of course, it is great talent. We've got great talent in the UK. We've got super universities across the UK. So very important to have, great entrepreneurs. And of course, the sector domain expertise, which is there because of London. It's global, fintech hub and global finance hub. And going back to America, in America, often people say you've got the B2C activities in the Silicon Valley, you've got the B2B companies in New York, and of course, London, we've got everything in one city.
Yeah, I mean, I think the idea that, I'm thinking more now around the competitive edge of the UK fintech market, and you spelt out some really interesting elements around talent, around deregulation, around a supportive regulator. And I'm wondering as well, does that mean that the likes of Revolut, Monzo, Wise, Starling, all these sort of big unicorn names that have grown up here in the UK, do you think that's the combination of all of those elements put together? But also because when we look at the US, despite their sophistication in so many other parts of the economy, strangely enough, in banking, they're actually quite sort of backward. And, chip and pin and these sort of things came much, much later than it did in the UK and Europe. And I'm assuming, and I guess it's partly because of their provincial and banking structures. They have many banks across different states, across different jurisdictions, and very few money center banks that have got the capital to be sophisticated, if you like, technologically. And in the meantime, we're from a European and Far Eastern point of view, language will have played a big part. So actually, it kind of all coalesces to make the UK probably right at the top of the league table in terms of fintech innovation. Would that be an exaggeration or a reality?
Reality, definitely, I fully agree with your assessment, Ben. I think these are our competitive advantages. It's almost like we are a middle ground here in the UK. We are neither too big, like in the States, we're not so complex. Equally, we're English speaking here, and we have got all these, positive the framework, which we have got, the regulatory framework, talent, investor base. So I think I would definitely agree with that. And I would say these large names you mentioned, from Revolut to Monzo, Starling, Wise, these are the household names. So these are the unicorns which everybody knows. But equally, they're very different. And also they've got certain things in common. One thing which is very interesting is that all of them fall into these 13% of fintech companies, so both B2B and B2C. And that's not always very obvious. So when you think about Starling Bank as an example, you've got as a clearly B2C was the starting point, having your own banking app. Then they offered B2B for business client customers, SMEs, to open their business account. But the majority of their revenue comes from white labeling their technology stack. It's like banking in a box. So any new customer who wants to launch a new neobank, can buy the engine which powers Starling and license that from Starling. So that's where the main revenue comes from. So you see each bank has got its different setups. And of course, Monzo is also a regulated bank, while Revolut, although Revolut has got 65 million customers worldwide, 15 million of those are here in the UK, is not a bank yet, has applied for a banking license many, many years ago, has got a provisional license a few years ago, and now applies for the final one. But they've done very well without it, you could say. They've done and grown exceptionally well globally, and also offer, of course, a B2B offer. But what they have done, it's obviously become the money hub. Anything to do with money, no matter if it is fiat currencies or cryptocurrencies, you can invest both in one app. And so I think that's one of their key advantages, to move very fast, moving very aggressively as well, in
And
expanding
then, and
globally.
then in terms of, what's the legacy world getting up to here? Obviously these big banks and with their branches and their very complex tech structures, in terms of they've done a lot of consolidation over the last few years. So there's a layering of all sorts of technology sitting on top of each other, and some really old legacy server systems in place. And that's just banking, investment banking. It's similar in asset management, in insurance. What are these guys doing to really defend themselves and potentially kind of become more aggressive in this alternative space and try and be more flexible and compete with the fintech startups and innovators that are coming through? Are they succeeding, or are they blown out of the water now completely?
Yeah, I would say, by putting my hat on as ex-banker and thinking back to, the last 15 years, and after the financial crisis specifically, banks were focused on compliance. All of them put the 3 lines of defense models in place, increase their um, risk management capabilities, and really focus. And I remember all projects which got funded had either were must-do projects, compliance-driven, or there was somehow a compliance angle to it. But innovation in itself was not paid enough attention to. And that's always the issue. Once you've got something in your blind spot, it gives space to newcomers to move in. And I think that's what had happened then 10 years ago, where we had, new fintech companies being born because the existing players did not innovate enough anymore, and therefore left more and more space, for newcomers to move in. And what we have seen then was that we talked initially, I remember, a few years ago, we talked about the rebundling effect, that as a large bank, of course, you offer so many services to your end customers, while you've got hundreds of different fintech apps offering sub-segments of new services. But which customer wants 100 fintech apps, on their phone? Probably not many. And therefore, banks have got the opportunity to be really the orchestrating platform and working with the best fintech companies, white labeling their solutions and offering them to their millions of customers. And I think that's one business extension lots of banks have done, is really working with fintech companies, and they're doing it in multiple ways. On one side, it's really about partnerships, choosing fintech startups almost like as a traditional supplier, providing their services to you. The other one is about investment. We've seen more fintech, more banks setting up corporate venture capital arms. They invest strategically in fintech companies, which they not only become a shareholder of, but then of course become a big customer for. And often they invest before they announce, that they roll out the solution across the bank, because of course this increases the valuation immediately. And then we have seen lots of banks also who want to be seen as an ecosystem player, who set up an acceleration program, who offer mentoring to startups. and want to show that they're friendly towards the ecosystem because it benefits them ultimately as well. So we have seen multiple approaches, and I think any bank should do all of them, to be honest. Because you don't know what actually will work best long term. So it's better to like I guess like in investing, it's like a diversification strategy for innovation as well. And so we've seen lots of banks doing all of those activities to really stay up to date, being moving faster and learning how to
Interesting.
innovate and
And
learning
and then
from
maybe
fintech
we can kind of
companies.
change tack a little bit and talk about the investment process. And I'll come back to this, where does Fintech Circle fit in the investment cycle? Clearly, it's going to be a pretty early stage, but when you're thinking about the challenges that a typical fintech company at any part of the cycle of their development, what are the key challenges that they have to, I mean, I presume it's not too dissimilar to any other sector. It's about having first and foremost a solution for a genuine problem out there. That's fine, that we can work on that. What's different is probably the regulatory framework that they have to work within. But as you say, the sandboxes that the FCA is putting in place and stuff like that is actually really useful to allowing them the flexibility and the speed to get on with it. Then the next thing is, how do you scale? So this kind of average revenue per user, and I'll come back to that in a second, because margins are really thin in finance versus the cost of acquiring that customer have to be positive, clearly, and so that journey is a potentially really expensive one to get to the point of scaling. So maybe we can touch on a few of those points in terms of what are those margins like on different products? How do you go out and get those users? What's the cost of potentially accessing those users? And what do you perceive to be genuine scale before they go on to the next sort of round of funding?
Yes. I would say, when I think about early stage startups, for them, it's really about developing a product which the market needs and wants to pay for. We have seen in the past often products which are all free. And of course, then you don't have product market fit yet, because if you don't have paying customers, you can never can really scale successfully. However, of course, if you think about the social media giants, they all had paid free product, but of course, you as a customer became the product, and your data was used to monetize the relationship. But I think it has to be a business model which makes sense, a solution which the market ultimately wants to pay for. And then as a B2C startup, as you said, it's about client acquisition costs compared against the lifetime revenue of your customers. So I give you some bad examples first. So examples where it didn't go well, where was the robo advisory space. Where we said, okay, majority of people, won't have enough money to invest to justify a private banker. But equally, the advice you could give, by having diversified portfolios across different ETFs is very simple. So you can automate this via robo-advisor and automatically do that on an app. And so we had lots of robo-advisors being born. But then they realized, it's very expensive to acquire individuals, and we had people having advertisement on the tubes, on buses. It gets more and more expensive. But then if people just put in a small amount of money on your app, you never make your money back. And so these many robo advisors therefore then closed down, it or became acquired, were not standalone business models. So I think as a B2C company, that's a major challenge to have. I would probably argue that going forward with agentic AI, this will become easier. We have seen that AI solutions and agents are being used very successfully for client acquisition. And they are often divided into, different types of lead generations, and you can automate it at huge scale in a very sophisticated way, where marketing is not anymore a soft skill, but it's a really hard, mathematically driven, scientific way of approaching and acquiring customers. Very impressive, I think, what you can do now. So hopefully, therefore, it should help to reduce client acquisition costs on the B2C side. I would say if we move to B2B, here the goal of any B2B startup is to really be taken seriously by your business customers ultimately. And most B2B startups need to become enterprise ready, which basically means you need to you need to walk the walk, you need to talk the talk, you need to understand the compliance requirements of your customer. You need to be ISO certified, depending what your customers needs in terms of cybersecurity. So we see that as a B2B startup, you have to grow up, and you have to have experienced salespeople who speak the language of your customer base. And then you have to get ready for very long sales cycles. So sometimes, when you talk to banks, it takes a year, it takes 18 months before you actually get in, by which time the salesperson can have changed on the other side, so it can be very frustrating. So that's why fintech companies, what they normally try to do is to build a pipeline consisting of larger accounts and smaller accounts. So you can keep the company over water until the big accounts hopefully bite by getting revenues, from smaller accounts coming in. But I would say definitely B2B is a different game, but it's a game most fintech companies play. Most of the B2B companies are not regulated, but their customers are, and therefore understanding of regulation, of regulatory requirements is central to being successful
Understood. And
in the
Susanne,
B2B
I'd
fintech
love to
sector.
ask now, where does Fintech Circle fit into this cycle? What do? You talked about this inner circle and outer circle and companies, etc. What does Fintech Circle do? I presume your main investor base is coming in at seed level or even at friends and family. And so how do you fit into the ecosystem?
Yes. So Fintech Circle, our investors, myself included, so we invest our own capital into fintech startups. The way we do that is because when I founded Fintech Circle, I was an angel investor in other networks, but there's nothing else in the UK which is fintech focused. And so you always get the wrong deal flow, as an investor. And equally, when you're a fintech startup and you're pitching to an agnostic investor network, you never get understood, because people don't understand technology enough, they don't understand the financial sector enough. And so that's why I created Fintech Circle to really ensure that we've got the best match between investor sophistication and understanding and high quality deal flow. And what we do, I mean, for example, next week we've got our next investor network coming up. We've got normally about 100 applications, for each event. And these fintech startups, they know that we are focused on fintech exclusively. They apply online to Fintech Circle. And then out of the written application documents, which includes investor deck, we also ask for an elevator pitch video and a questionnaire, which they all need to complete. We select normally the top 18 firms who then get invited to come to our Fintech Circle selection. And then they present to our investment committee, which is made out of other fintech investors and myself. And each of them has half an hour to present, to answer our questions. And then after those 18 companies presented, we choose normally the top 30%. And so now we've got about 5 companies we chose, which will invest next week at our investor network in person in London in the city. And it's always a great moment for our investors because we come together, those companies. What we also do, I should say, we also coach them because some of the startups, they come from the techie side and they're great in technology, great in but they don't know how to explain why we should invest. And so we help them in the storytelling, creating the narrative, the context, why investors should invest in their proposition. And so we can see this evolution of their startups to being much better, also presenting their own opportunities. And then, yes, then we invest. And then our goal is to add not just the capital, but add our contacts, our network. And I would say some of our investors, are people who sold their businesses and who want to reinvest, diversify the money they made. Other people work in finance in their day jobs, but want to understand what's the future of our sector and want to tap into the future of our sector. Some of the people in let's say, main traditional finance want to jump ship as well. At some stage, they would like to give up their jobs to join as a board member, as a non-executive director. So they're also looking at what company I can invest in, potentially being on the board seat, depending on my investment amount. And others, I would say, we have got, of course, banks joining us as well. We have got representatives of banks who are working for the corporate venture arms of the banks because they want to see early deal flow. They want to see what comes up next. We've got early stage VCs joining, who want to see what is coming into their pipeline. So it's a very interesting group and
Absolutely.
a very fun evening
Count
as
me
well,
in.
Ben.
And
So
Susanne, with
hopefully you
that in
join us
mind,
as well
how
next time.
can hopefully the listeners who are both at the startup phase as founders and investors and sort of general interested parties, how can we get a hold of you and see all the opportunities at Fintech Circle?
Yes, the best one is to, of course, look at our website, fintechcircle.com. Equally, you can reach out to myself, on LinkedIn, and then I can also provide more information. We also have events. Our investor evenings are very private events, so that we don't publish them in public, obviously, because we want to give our startups and our scale-ups the opportunity to pitch in private, versus crowdfunding platforms where you have to publicize, your revenues and your strategy in the public, and competitors could invest as well in you. Obviously, we don't do that. So we are very private in terms of our investor efforts and tasks. But we do have public events such as drinks. We have Fintech Circle drinks events where our community comes together. So it's another opportunity to connect. But I would say the best one probably is LinkedIn, to reach out if somebody wants to join our next investor network, or if somebody wants to apply to Fintech Circle, they can
Fantastic,
come
Suzanne. It's
and
been
apply
an
on our
absolute pleasure
fintechcircle.com
talking to
website.
you. It's a sector that I think, we can genuinely in the UK claim to have a real top talent and right at the top of the league in terms of innovation. And your organization is really kind of sponsoring and pursuing the opportunities for founders to find access to capital. So well done to you, well done to the team, and please come back again in the future and let us know about some of the big successes that you guys have had. So thank you again for your time. Thank you.
Thanks very much, Ben. Great to be on your show.